I'm just kidding. What's up, guys? Trevor Financial here. And as you can tell, it's Casual Friday. I ditched the button down and I'm sporting Batman today. We're going to go over candlestick charts today. I don't know if you guys know what that is. And if you do, then there's no reason to be on this video. And if you don't, then this is going to be for you. So just to give you an idea of what they are, I'm going to swing you around. This right here is a candlestick chart. Now, what a candlestick chart does is it shows you the progress that each stock is making that day during a set period of time. Now, that set period of time dictates how much the candle is formed. So, for instance, there can be a 5-minute candle, hour candle, daily candle, 3-month candle, etc., etc. So, each fully formed candle represents that area amount of time that you have set for it. So, what the bodies of them are, they're the main bodies. They're called real body, and that tells you exactly what changes happened within that set period of time. Now, if the candle is green, then that means it had upward progress that day, and if the candle is red, it had negative progress. Now, green candles, or bullish candles, right there, as you can see, generally have, or always, not generally, has an open at the bottom and close at the top. So that's their opening price of that set period of time and their close price for that set period of time. If it's green, that means it's always going to have upward trends, which means that number will always be higher than the open. Now, the red, or the bearish candle, will be the complete opposite. The open will be at the top and the close will be at the bottom, because that number will always be lower than the open, which is why it's red and why that one's green. So the real body is what dictates what numbers are within that range to tell you the difference that occurred during that set period of time. Now, another chart that you will see more than likely, more than you probably will see this one, to be honest, is this one. Now, it's still the same standard candlestick chart, but here you will have these virtual lines that are there that are considered wicks, shadows, or tails, as some people call them, and each have different meanings. So this wick is the highest price during that time period, and this is the lowest price during that set time period that happened. Now, on the bearish side, you have the highest price during that time period and the lowest price during that time period. And basically, it's just to give you a little bit more of a finite idea of how much room or how much it has changed, and that's basically the idea behind what these individual wicks mean. You know, like everybody calls them different. You can call them shadows, tails, or wicks. I personally like wicks. So, lastly, there's another chart that will be there every now and then, which will be these. Now, these charts here, right here, these are called Doji Charts. Now, these charts are really, really important. These charts are important because these charts show up when there's little to no change in that market that day, or within that set period of time. Now, if you're paying attention to a stock and you're looking to invest in it, and you want to make sure you make the right decision and everything, you look at their candlestick chart and you see a whole lot of these, that means there is no progress happening with this stock. So if you're trying to make an investment with these stocks and, for instance, try and flip them and make gain, or get as much as you can out of it once it hits its peak, if you see a whole lot of these, it's probably not going to happen, to be honest. So typically speaking, you want to look for a stock that has more green than red, obviously, and higher upward prices for set time periods than others if you're looking to just sell. Now, if you try and invest in one of these in a doji, you have to be very, 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 very picky, because if you just invest in it off the jump without actually putting forth the time to research it or to look into it to make sure that it is in fact a great investment, you're just kind of throwing your money away. You know, it's not a good idea to invest in something that obviously shows no potential at that time period. You know, you can look at its history and try and see, okay, where has it been, where is it going, or how it got to where it got to. But unless it had tremendous upward growth up until that point and then it kind of just peaked out right there, I wouldn't do it. So that's pretty much it. I mean, I understand it was a quick video, Casual Friday. I'm just trying to get just trying to get a little bit more of videos of explaining than just saying this is what I think. So you know, if you have problems or if you have any questions about candlesticks or anything like that, you know, just shoot me a comment about it and I can answer it as soon as possible. There's a lot more to candlestick charts. Don't get me wrong, this is not as easy as it looks, but it's really, really, really basic. This is the most basic explanation I can give, which is why this video is so short. So later on in the next videos, we'll get into the breaking down a candlestick chart and getting all of the information into it, make sure that everything is there so that you can look at any chart and be like, okay, I know exactly what's going on. You won't be afraid of it. You won't look at it and think, okay, I don't know what's happening here. It scares me away, and then you miss out on a good opportunity. So later down the road, you know, I'll make another video where I completely expand every aspect of the chart. But that's not this video. This video is just to give you the basics of reading a candlestick chart. So a quick recap: we got bullish and bearish. We have the real body of the candlestick. We have wicks, tails, and shadows, however you want to pronounce it, which represents the highest price at that time period and the lowest price at that time period. We have dojis, which means that there was little to no market activity on that set time period. The time periods you set yourself. You know, you look at it. You can say 1 day, 1 month, 1 year, 3 months, 6 months. You know, however long you want to look at it. You have a drawing of a candle. I mean, that's pretty much it. But you know, just reading candlestick charts aren't as hard as you would think, and they aren't as bad as you think, as long as you put forth the effort to look into them and figure out what they are. Again, this is just a quick basic overview of what candlesticks are, and a little bit later I'll make sure I make another video where I give full details about what everything is and how to break it down. But again, that's not this video. This is just to give you a quick overview. So if you like what you see, just go ahead and drop a subscribe, drop a like, and I'll see you in the next video.